Lightheart. Ben does a lot of hard work to bring this together. He just tells me to show up and be prepared for what we're sharing when she presents, or Jared. I think Jared did last time we did, which was November. We didn't do December because of the holidays. Let me just say Happy New Year to everyone. Hope you have good holidays and ready for the new year. You know, I look forward to the holidays. I love Christmas, New Year's, but I also know what's right around the corner. And that has mixed feelings. It's our busy time of year because we make our money as a CPA firm, but it's also can be stressful. But we decided to come up with this topic today, and it sounds a little bit maybe self-serving on my part, isn't it? A little self-serving, how you can keep me happy and me actually tell you how to do that. But I've been doing taxes. I graduated from college in 1990, and so I've been doing taxes over 20 years. And over the years, it seems like every year there's certain things that are always an issue with our clients. And apparently, we are not doing a very good job of communicating that to our clients. We talked a little about New Year's resolution. It seems like there's probably about half of our clients every year, especially the ones that extend and do it in October. Next year, I'm going to get it to you in January or February when we have all their information. I said, okay, good, we'll see you. And we usually extend the same people every year, but that's okay. All right, you have in front of you a lot of information. You have a copy of the PowerPoint presentation we're going to work through today for you to take notes. And you have a lot of stuff there on your desk to take with you. This is a calculator if you have it opened it up to see, and a pen, and a lot of information. Charles did a great job. And what I'm going to try to do today is a couple things. One, how you can keep us happy, and two, how you can save money to help invest with Stephen and Charles and them to make more money, to retire earlier and retire where you have the money you want to retire with. All right, so hopefully this will work. All right, how to keep your CPA happy. The first thing is we don't know if your information changes. Your address change, your marital status change, your dependent status change. We had a client about 3 years ago that we did his return. He finally looked at it. After we did it, he said, "You're missing one of my children." I said, "Okay, give us the name, the date of birth, social security number." He said, "She was born 3 years ago." So the good news is we could go back and amend those returns to add the dependent. But that's another lesson, is glance over the return. That's a good idea. Don't just assume we know everything or get it right or make changes. So if anything changed, make sure you communicate that to your CPA. You got children that are born, then your children that are leaving the nest. If they got married, they may or may not be able to be claimed as a dependent. If they're off to college, they may or may not still be able to be claimed as a dependent. So if that change, or if that's in your situation, you have kids that are at that age now, or if they got married, things may not be the same. And you may not think to say anything, or you maybe think that we somehow know or should know. So your contact information, your marital status, independence. So, occasionally we have clients that get married and say, "Oh yeah, I'm married, but we still want to file single." So well, that's not an option now. If you're married, your options change. Married, joint, or married separate. Single's not an option. Head of household's not an option. Now, if you got divorced, that's a different story. Head of household may be an option. But still, or if they're in the process of getting divorced, how long they've been separated. So some of those issues still will depend, have an impact on what your potential filing statuses are. Another problem that we have is the stock basis. Now, this is going to change. The IRS now requires brokerage companies to report the stock basis to the IRS, which is good and bad. Most brokerage firms over the years have gotten better with providing to our clients with their year-end statements the realized gain and loss statement, which shows the sales price and the basis. But if for some reason the stock wasn't purchased while that brokerage company handled your account, they may or may not have that information. So there's a new form, and I think I brought a copy, but if anyone wants to see it, I can share it with you. But it's a new form that is part of the tax return, and those totals flow into the Schedule D if you're familiar with the gain loss, capital gains, and stock sales. So it's additional information. It does allow you to, if the basis is different than what the broker has, for you to note that on this new form. But the good news is that'll make it easier for us. But that's one of the things that we always struggle with, or at least in a lot of cases, is that in the past, the brokerage firms were only required to give the IRS the sales price. And the 1099-B that comes, this shows that. And so if you don't give us that report that comes from the brokerage company, then we ought to have to call you or call the brokerage company, and it just takes, and the brokerage company calls all the time during this time of year, don't you?
Yeah, and we say, well, we don't know the basis because it's not here. You bought it somewhere else, and when it transfers in, I have no idea what you paid for it.
Yeah. And if it goes back a long time, it makes it a fun project. But now, if the brokerage company has it, it'll be reported to the IRS, and you'll have that information. So it'll make it a little easier for us.